While the market was bleeding red, down 800 billion in a single day, something extraordinary was quietly being confirmed in the background, and almost nobody connected the dots. A $500 billion company just paid $1.8 billion for a 5-year-old startup most people had never heard of. Grayscale, the world's largest crypto-native asset manager, is publicly doubling down on XRP. A company called Evernorth just filed an S-4 to go public with XRP blockchain infrastructure at its core. And at the DC Blockchain Summit, sitting United States senators called this space revolutionary and compared it to the founding ideals of this country. So let me ask you a direct question. If all of this is happening in the open, right now, why is the fear index still sitting at 8%? Why is retail still checked out? The answer to that question is what today's video is actually about. And once you see it, you cannot unsee it. Welcome back. I'm not here to sell you a dream or hype a price target. What I do here is pull raw signals out of the noise, apply the math, and show you what the structure is actually saying. If you're new, this channel is for people who want to understand, not just react. Today, we decode 4 separate developments that, taken together, paint a picture that retail is completely missing. Let me start with the hard truth. Most people watching the crypto space right now are staring at the wrong thing. They're watching the daily candles. They're watching the fear index. They're watching what XRP did on Tuesday versus Thursday. And while they do that, the architects of the next financial system are laying pipe. Here's the concept you need to understand. The Internet of Value has an infrastructure problem, and that problem is being solved right now, not in 5 years, not after the next bull run, right now, in real time, with real capital. Think about how the Internet of Data works. When you send an email, that data moves across borders in milliseconds at essentially zero cost. There is no bank in the middle, no settlement window, no batch processing cycle. The data just moves. But when you try to do the same thing with money, you hit a wall. Banks operate in batch cycles. Payments, messaging, clearing, and settlement are all decoupled. A cross-border wire can take days and cost 6% in fees. That's according to World Bank data. 6% in 2025. That is the problem XRP was designed to solve, not as a speculative asset, as infrastructure, as the plumbing that makes value move the way data already does. Now, here's why this matters for everything you're about to hear. When a company like MasterCard pays $1.8 billion to acquire stablecoin infrastructure, they are not making a bet on crypto as a concept. They are recognizing that the current rails are broken and the new rails are being built right now. When Grayscale creates a formal taxonomy that classifies XRP as a key player in the currency sector, they are not doing marketing. They are positioning a product for a massive wave of institutional capital that has been sitting on the sidelines, waiting for exactly this kind of clarity. The confusion retail investors feel, the frustration, the why isn't this going up with all this good news energy. That confusion comes from watching the price instead of watching the structure. The structure has never looked like this before, and today I am going to show you exactly what I mean. Let's do the math, because the math tells a story that the headlines cannot. Start here. Global cross-border payment volume sits at roughly $150 trillion annually. That number moves through a correspondent banking system built on Nostro and Vostro accounts. Roughly $27 trillion in capital locked up in pre-funded accounts around the world, just to make those payments work. That is not productive capital. That is dead capital, sitting in accounts, acting as a buffer, because the system is too slow to move money in real time. XRP's entire design thesis is that if you have a bridge asset that settles in 3 to 5 seconds, you don't need those pre-funded accounts anymore. You free up that $27 trillion. That's not a small number. That is larger than the entire U.S. national debt 5 years ago. Now let's zoom in on stablecoins, Because the MasterCard acquisition gives us a very specific data point. Stablecoin transaction volume hit $33 trillion in 2025, up 72% year over year. MasterCard's entire network processes about $9.5 trillion a year, meaning stablecoin volume in a single year was more than 3 times MasterCard's total annual network volume. And that's before mass adoption. That's before the Genius Act fully takes effect. That's the baseline. So when MasterCard pays $1.8 billion for BVNK, a company doing $40 million in annual revenue, they are paying 45 times revenue. That is not a valuation based on what BVNK is today. That is a valuation based on what the infrastructure BVNK represents is worth when $150 trillion a year starts moving through it. Now here's the piece that most people gloss over. There was a bidding war. Coinbase tried to buy BVNK for approximately $2 billion and walked away in November. MasterCard tried to buy a different company, Zero Hash, for between $1.5 and $2 billion, and that fell through too. Stripe paid $1.1 billion for Bridge in October 2024. MasterCard's deal beats that by 64% just 17 months later. Think about what that price escalation means. The entry price for stablecoin infrastructure acquisition is going up fast. The people with the most information about where this is headed are paying more and more to get positioned. That is not the behavior of organizations who have doubts. That is the behavior of organizations who know exactly where this is going and are in a race to own the rails before someone else does. Now apply that to XRP's fixed supply. 100 billion tokens, hard cap, no exceptions. Roughly 55 to 57 billion in circulation. Exchange reserves tracking near multi-year lows. If even a fraction of that $150 trillion in cross-border flow starts moving through XRP-based infrastructure, not all of it, just a fraction, the math on supply and demand becomes very uncomfortable to ignore. This isn't a prediction. This is a structural observation. Now let's look at who is acting on this thesis, because this is where retail and institutions completely diverge. Ray Sharifi at Grayscale, the world's largest crypto-native asset manager, made something very clear this week. He said an XRP ETF opens the door to entirely new groups of investors. He said XRP is battle-tested, and he placed it at the center of what Grayscale calls the currency sector, a formal classification within their taxonomy of the entire crypto ecosystem. Grayscale was the first to bring Bitcoin into a financial product. They were the first to challenge the regulatory infrastructure around crypto ETFs. When they create a formal sector classification for XRP and begin publicly advocating for an XRP ETF, that is not marketing. That is institutional product development. You don't build a product unless you have buyers lined up. And on the ETF front, yes, we saw some rough inflow days, red days, 0 days, but a green day appeared on March 17th. And if you understand how ETFs actually build, they do not launch like rockets. Bitcoin's ETF had rough starts too. The floor gets established, then the institutions layer in. You are watching the floor being established in real time. Now look at Evernorth. They just filed an S-4 form for a merger with Armada Corp, positioning themselves specifically as an XRP blockchain-based financial infrastructure company going public. Their own language is striking. We believe global finance is entering a new era with digital assets playing a larger role in how capital is held, managed, and deployed. This is a company going to the public markets with an XRP infrastructure thesis at its core. That is a significant development. Public companies have fiduciary obligations, auditors, disclosures. You don't put XRP at the center of your S-4 filing if you think this is going away. And then there's the DC Blockchain Summit. Senator Cory Booker, standing in front of the policy establishment in Washington, called this a $3 trillion market, representing incredible human beings and millions of customers looking for hope and opportunity. He said blockchain, crypto, and digital assets could be the representation of the best of American values and ideals. That is not a fringe opinion. That is a sitting U.S. Senator giving a keynote address at the Blockchain Summit. Ask yourself, does a traditional Wall Street company like MasterCard, operating under fiduciary duty to shareholders, spend $1.8 billion without absolute conviction about the regulatory direction? Does Grayscale build an ETF product without certainty about the legal landscape? Does a company file an S-4 with the SEC with XRP at its core if they think there's regulatory risk they can't manage? The answer is no. Institutions do not gamble at this scale. They position, and right now the positioning is unmistakable. So what happens next? What are the specific catalysts that close the gap between what retail sees, fear index at 8%, red days on the ETF chart, and what the structure is saying? First, the Genius Act is already signed and in effect. The U.S. now has a clear legal framework for stablecoins, the first time in history. That's the match that lit the MasterCard acquisition. As banks build out compliant stablecoin operations under the Genius Act, the demand for settlement layer infrastructure, rails that can move value in seconds across borders, accelerates. Second, XRP ETF momentum is building whether retail notices the day-to-day or not. Institutional products take time to reach scale. The pipeline is being built. Watch the weekly trend, not the daily noise. Third, the Evernorth S-4 means an XRP infrastructure company may become publicly tradable in traditional markets. That means retirement accounts. That means analysts covering it. That means a whole new class of investor who has never bought crypto directly can get exposure to XRP-adjacent infrastructure through a brokerage account. That is a new distribution channel opening up. And fourth, pay attention to this one. Ripple's global infrastructure narrative is accelerating. The connection between Ripple's Internet of Value vision and what MasterCard just paid $1.8 billion to acquire isn't subtle. BVNK builds the exact plumbing Ripple has been describing for years. Connect bank accounts to digital assets, move value in seconds, settle across 130 countries. The architecture Ripple has been building and the architecture Wall Street just spent billions to buy are converging. When convergence happens at this speed, the window to position ahead of the crowd is not unlimited. Here's what I want you to sit with for a moment. The fear index is at 8%. Retail hasn't come back to the market. The daily ETF charts have red days. And simultaneously, a $500 billion corporation just paid 45 times revenue for stablecoin infrastructure. The world's largest crypto asset manager is building an XRP ETF product. A company is going public with XRP blockchain at its core. U.S. senators are giving keynotes about this at Washington summits. These two realities cannot coexist indefinitely. Either the institutions are wrong and retail sentiment is right, or the institutions are positioning while the crowd is distracted. History shows us which of those tends to be true. The window where the uninformed and the informed are looking at the same price, that window has a closing time. I'm not here to tell you what to do with your money. That is your decision, made with your own research and risk tolerance. What I am here to do is make sure you are not missing the signal because of the noise. The noise right now is red candles, fear indices, and slow ETF inflow weeks. The signal is MasterCard paying $1.8 billion for XRP-adjacent infrastructure. The signal is Grayscale building a formal product framework around XRP. The signal is a public company filing an S-4 with XRP at its center. The signal is the Internet of Value being built, not as a concept, but as capital-backed reality, right in front of us. History does not reward comfort. It rewards those who pay attention when the room is quiet. If you made it this far, drop signal in the comments. I want to know who actually sees what's happening here. Like this video if it gave you a clear-eyed view of the moment we're in. And subscribe if you want to keep cutting through the noise together. Stay rational, stay patient, stay positioned.